Hello, everyone, and welcome to the program. This is Business Morning. This Friday, the 3rd of January. Oil prices jumped sharply overnight on the news of the killing of the head of Islamic Revolutionary Guard Corps General Qasem Soleimani by U.S. airstrike at Baghdad airport in Iraq. The killing, ordered by the U.S. President Donald Trump, according to the Pentagon, sent Brent crude oil to $68.17 cents per barrel. That's about 2.29% this morning, while the U.S. West Texas Intermediate touched $62.85. That's a big jump, 2.73%. Meantime, the flight to safety by investors also pushed gold to 1.05% higher. That's trading $1,544 an ounce in continuous trading. Silver was also stronger at $18.230, and that's 1.02% better. Meantime, stock markets are down around the world as we speak. As we speak right now, the Asian markets finishing today in the negative territory, and Europe is opening on a negative territory as well, on a back footing. That's just happening within the less than 24 hours ago. In other markets, dollar index, that's the DXY, dips 0.03% early today to 96.81. Bitcoin surged on the news of Soleimani's killing, 3.65%. That's the Bitcoin in US dollar terms, while the stock markets tumbled from China to Singapore to India. Trading the news on Nigerian Stock Exchange Annual Market Index Review released on Thursday. The shares of MTNN Nigeria climbs on inclusion of the telco giant in the NSE 30, the NSE Pension Index, the NSE Lotus Islamic Index, and the NSE's Corporate Governance Index. The telco giant shares also climbed on the notice that the company issued on plans to redeem 123 billion preference shares from shareholders. So what's the package like? This is what the MTN total redemption package looks like. MTN is redeeming 402,590,263 units of shares at $0.005 US dollars. The price of the preference shares will be coming through at 0.9925579 per share. That's just close to $1. So if you put that in naira value, it gives you 123 billion, and the price about 307. And the date for that was January the 2nd. That's yesterday, informing the market about that development. Meantime, the shares of Forty Oil dipped 0.55% on Thursday on the removal of the energy company from the NSE 30 index. The shares of Oando was muted, however. Oando was also removed from the NSE 30 index. Meantime, the shares of GlaxoSmithKline also dipped on Thursday as the company was removed from the NSE Pension Index. The stock exchange also published the rebalancing of 4 other independent indices, 2 of Afrinvest securities and 2 of Meristem securities. Afrinvest Bank Value Index had no change to the portfolio, but Afrinvest Dividend Yield Index had corn oil, Dangote Cement, and Vitafoam included, and NASCON, NEM Insurance, and USCN removed. Let's talk to Abiodun Kerepe, who is the head of investment research at Afrinvest Securities. He's joining us live from the trading floor of the Nigerian Stock Exchange to give us some reading of this index rebalancing, which is an annual program by the Stock Exchange. Abiodun, good morning. Welcome to the show. What's your thought on this rebalancing? Of course, which is a traditional thing that the Stock Exchange does every year since 2000, almost 10 years going.
Yeah, good morning, Borsin. Once again, Happy New Year to you and to your crew. Oh, yes, the rebalancing is just a traditional exercise which is done across board. Anywhere in the world where you have indices, the index managers would have to, depending based on agreement, usually annually, semi-annually, review these indices. And based on the criteria that have been set for the selection of the constituent ab initio, whichever of the constituent that no longer meets those criteria are then excluded, and if there are new stocks or constituents that meet the criteria, they are then included in the index or on the indices going forward until the next date of review. Yes. So for us also at Afrinvest, we have two of such indices that are listed on the stock exchange. We have one that we use to track performance of value banking stocks, and we have the second one which we use to track performance of high yield dividend stocks. So the objective or the strategy behind this is that they are both multi-factor indices, slightly different from single-factor indices which you find in most markets across. The reason for this is that rather than just using market capitalization as the only criteria for selection or inclusion of constituents on the indices, we then put a weight on the value performance of stocks that would also be included on those indices. So for the bank, for instance, you get to see that value implies that they have performance below, or fundamental performance in terms of price earnings ratio that are significantly below peer. And if you're looking at earnings, they have earnings that are stronger than their peers. So the return on equity is one of such indicator that we put a huge premium on. And for any of stock or any of the constituents to be on that index, it must deliver above average return on equity for about 8 of a 16 quarter period. So, the same thing goes. So the next criteria would then be what we call the book value to price earnings yield, the earnings yield, and then the dividend yield in itself. That's the second criteria for selection of constituent on that index. The third criteria would then be the free float market capitalization, and the fourth of it is the annual traded value ratio of the stock, which also measures the liquidity of the stock or to be included on that index. Because at the end of the day, the purpose of having an index is such that investors are able to trade or buy into the index. And when you have constituents that are not liquid, it then defeats the purpose. You have constituents that are not fundamentally strong, it defeats the purpose. And then same thing applies for the high yield dividend index also. That also tracks companies that have strong dividend history, probably 4 of 6. Yes.
Yes, a quick one. We'll come to the Afrinvest basket of indices on the market. But if we stick first with the Nigerian Stock Exchange, if we talk about the NSE 30, the industrial, the banks, and the rest of them, you've explained the composition and all of that here. But again, why do we watch this index? Why is it important to retail investors? And I would want to talk about retail investors. Those who are institutional investors and foreign investors have a way of tracking this. But for retail investors, do you think folks watch these indices on a daily basis, on a quarterly basis, and annual basis? Why is it very important when companies are taken out of any of these baskets and others included?
Why it is important is that it is a level of expression of confidence on the stocks or the constituent of the index. So it then means that a retail investors can close their eyes and have confidence to buy into the constituent on that index or to buy into the entire index as a whole. It reduces the level of effort, the level of work that has to be done in terms of or in form of research or in form of fact finding to sort of know if you're investing in an index that is sound, that is strong. And because you know you have someone, a manager somewhere that is monitoring the performance of the index, monitoring the performance of the constituent, it gives a level of confidence to the investors. This is why it is very important.
Great. So if we look at what was released yesterday, the consumer goods, the banking, the NSE, oil and gas were not rebalanced in any way. what does this say about, in particular, the first two, the industrials and the consumer goods, sorry, I beg your pardon, consumer and the banking index?
So it wasn't like they were not rebalanced. They were rebalanced. However, that means that the constituents still meet the criteria for selection or inclusion on that index. So they still meet the criteria for them to remain on the index. So at the end of the day, there was no exiting or new incoming constituent on the index. This is the implication. This is what it means. Unlike what you see happen to the NSE 30 index, where you have new names such as MTN joining the index, it means that MTN, after its listing early 2019, has met the criteria for inclusion on that index. I mean, we both know MTN competes fairly well with Dangote in terms of the most heavyweight stock on the Nigerian equity market as we speak.
So, yes, that's why we're drilling down a bit on MTN here as the new, is the new poster boy for the Nigerian market. Because out of what was released yesterday by the exchange, it went into the NSE 30, the pension index, the corporate governance index, and I think one other index. So it means that investors can begin to take a second look at MTN. What's your thoughts at Afrinvest on this particular company with this inclusion in a number of markets indices?
So we think here that MTN deserves it as long as it met the criteria for inclusion or selection. It's either the first or the second most capitalized stock on the stock exchange. In terms of corporate governance, you could rely on the structure of corporate governance within the MTN group. And then in terms of its ability to pay dividend, pay income, which is critical for it to have been included on the NSA pension index, it also meets this criteria. So we clearly think and believe that this is the right thing to have been done as long as the stock met the criteria for inclusion on those three indices.
Why is the corporate governance index inclusion of MTN very important? That's a very specific and totally a bit different index.
Okay, so
among all
why
the
this
others.
is important is why this is important is speaking to the broader picture of what corporate governance means. It means that you have a management that is put in place structures to properly run a business, to ensure that there are no leakages, to ensure there are no excesses, to ensure that the business is well run, to ensure that the management meets as a when due, as a when expected, to take critical decisions that affect the business, that affect the day-to-day functioning of the business, that affect the long-term planning or the long-term, achieving the long-term objective of that business. So this is why this is important. This is the implication of it having a good corporate governance structure, and it is one of the variable that a lot of other companies, that operates in Nigeria, need to also copy, need to also imbibe into their culture. Corporate governance is key. To play on a global scale, you need strong corporate structures. You need strong corporate governance structure in your business, in your company. This speaks to a whole lot of issues around power, transferring power, around how the business is run. So it gives confidence to investors at the end of the day, and you could have more comfort around the numbers that come out from the business in terms of their performance, either turnover or revenue or profitability. Any of this number, you could have confidence in it because the structure is strong enough to ensure that the auditors look into the numbers as a when due, audits are carried out as a when due. There are no undue influence on the auditors or on any parties that are important to clearly certifying the true state of the business.
Okay, so let's talk about the banking index. The NSE left its the composition of its own banking index unchanged, and you folks at Afrinvest also left yours unchanged. Was that a coincidence?
Yes. Also, so I mean, we say it's just a coincidence, a beautiful coincidence. I mean, the implicate what this means is that those banks, they keep meeting the criteria for being included on the index. For our index at Afrinvest, the NSE Afrinvest Value Banking Index or Banking Value Index, there must be a minimum of 5 stocks on the index at every point in time. And as it is, those stocks that are on the index still met the criteria of having above average return on equity. In terms of liquidity, they met the minimum liquidity ratio requirement that has been set. And in terms of free float market capitalization, they also met their criteria, which is very important. And this just means that for the NSE also, for their own banking index, the criteria that have been set to include or remove stocks or constituent on that index, those banks still meet the criteria. And it's the next review is probably around July this year, 2020. By then we'll be seeing if anything should change fundamentally in terms of liquidity, in terms of free float capitalization, is going to affect the constituent of that index. As long as they maintain strong fundamental performance in terms of earnings, net income growth, strong net income growth, then we can say that those stocks would remain on that index for a relatively long period of time.
So if you look at the banking sector, which of course is the barometer of the market and for the economy, not only here but anywhere in the world, what's your take on the banking stocks, at least if we go by the tier 1, tier 2 lenders in our jurisdiction? Do you think that the raft of 2019 unusual monetary policy actions had impacted on them in any way? Moving into 2020, what's your take at Afrinvest? If you check in through your banking review document that you published. So
yeah, definitely. I mean, the banks operate in a sector where regulation is strict and is clear. Given the CBN stance on macro policy at every point in time or at different point in time, they tend to regulate and change their regulation for how the banks maintain their numbers, how the banks are able to generate, earnings, and some of these regulations definitely affect them. So, for instance, when the CBN came up with some of the unorthodox policies around liquidity management, interest rate management, and FX management, we saw how this affects our bank have been able to change the structure of their balance sheet such that they can also take advantage of opportunities and protect themselves against whatever pending risk in the economy as it is. So they've been compelled to increase their loan to deposit ratio to 65%, which already the deadline is passed. I still saw in the headline recently that some banks were fined again for probably not meeting that regulation. What this means is that it portends lower earnings for them, because when they are fined, at the end of the day, it hits into their bottom line. So, but the magnitude may not be so significant at the end of the day. And as it is, they will tend to also adjust as we go into the year. So for most of them, the last month of 2019 also saw the CBN come up with policies around reducing fees, non-core banking income fees, around, electronic transfers, and all of those variables. This also would impact on the banks. However, what can compensate for them is their ability to also scale up on the number side.
Thank you so much. We got to leave this conversation at this point. Thank you so much. We appreciate you coming this morning to drill down on this new indices review by the stock exchange. Thank you so much. We'll take a break. We're still sticking with the marketplace when we'll come back.